Hello, everybody. Can y'all hear me?
Just go. They can hear you. You already checked audio. You good, bro?
So, okay, y'all can hear me. Okay, I can't hear y'all.
So let me add them to the stage so that they can
Okay,
communicate with you.
thank you.
Mhm.
Peace, peace.
Peace. Okay, I can hear you now. Now I'm not just talking to myself. Okay,
Yeah, we
how
got
are
you.
you doing?
I'm doing good, man. How you doing?
I'm doing well. I apologize for the rescheduling of the class a couple times there. It's been a few busy last week or so. But today is going to be an especially good class because today I'll be going over two major statements that you can receive that you can go get and look at yourself on the Treasury website and the CFTC website. The CFTC specifically being the Commodity Futures Trading Commission, and then the Treasury. Everybody knows what the Treasury is already. But this publicly available information has a lot of good leading indicators as to what future market movements may hold on a week to week time scale, usually. To sometimes larger, more swing trades. So I'm going to go ahead and share on my screen here the daily treasury statement. Just let me know when y'all can see it and when to stop zooming in.
They can see it.
Yeah, I can see it. Like, you zoom in a little bit more. That's good.
All right, cool. So this here is the daily treasury statement. As you can see, this is the most recent one for the last business day, which is January 24th. Today is Monday, January 27th. Now, one thing to mention is that everything that you see in these columns here is denominated in millions. So these are not straight notional number denominations here. So the opening balance is essentially what was the balance on the treasury sheet going into the day. So operating cash balance is the deposits and the withdrawals taken from the deposits essentially.
Mm.
So as you see, we went into here with 760,040. So that's about 76 trillion, give or take, on the market so far, or I should say, being the opening balance for the operating cash there. Today we had about 25 billion in deposits, about 16 billion in withdrawals, and that was for Friday. So when you take the withdrawals and you subtract them from the deposits, what you get there, that operating cash balance is also called the fiscal net flow or the net fiscal flow. And that's essentially the amount of inflow that's coming into the economy, or if it's a negative number, the amount of money that's flowing out of the economy. Did
Mm.
anybody have any questions or thoughts so far before I continue? Any statements anyone would like to make?
Give them a recap of how it's beneficial to utilize the Treasury report and what it is for those people who may have not been here last time, please.
Yeah, so the reason that this is beneficial, what this essentially is the Fed's books or their balance sheet. So this tells you where the money is actually going within the economy at any point in time. And this is especially useful because it shows you where it's going and what's going on. It's also particularly useful for government contracting as kind of a leading indicator as to where funds may be allocated, especially if you're somebody that operates in a variety of different NAICS codes. It's good to get an anticipation of where more funds may be allocated in the event that you're developing your strategies or whatever may have you.
Oh, good.
Like for example here, for a company that did a lot of defense contracts, right? This withdrawal here, Department of Defense, miscellaneous, this is usually military spending. So watching the trends on this, withdrawals is money that's leaving the government and going into the economy. Deposits is money that's leaving the economy and returning to the government essentially. But ideally, you seeing this number trending upwards or a lot of funds being allocated here is a good sign for you if you're a defense contractor, for an example. Did anybody have any questions so far before I start going over the different things in this document here?
Yeah, how do you get the statements? How do you look that up?
So you go to fiscaldata.treasury.gov.
All right, hold on, let me write that.
Data statements. I'm going to drop it in the chat right now. Can y'all see that there?
You put it in the chat?
Yeah, I just put a link in the chat there.
Yeah, I got it.
Okay, so when you go there, you see right where it says PDF, Daily Treasury Statement PDF, and then it'll have the date January 24th.
Okay.
You just download that one, and that's the most recent one.
Yeah. Oh, I see it. I bet. Appreciate you.
Yes, sir. So now that we're in here, another good thing that it's used for is to project where the markets are going.
I have a question for you. I'm gonna ask it so that everybody can hear me, but I ain't gonna walk in front of the camera.
Okay.
As far as the current administration transitions, is it possible to see where some of that newly allocated money has went over like the last 2 weeks, such as like into AI and things like that? That way you can see where the United States is putting its money, so you can see where you should possibly be investing in or looking to be working.
So 2 good columns for that is the this month to date column and then the fiscal year to date. It'll give you kind of an insight into the trend that's coming, or the trend that's been happening in regards to the allocation of funds.
Can you blow it up a little bit, like, or either highlight the specific area you're talking about?
So this column here, where it says this month to date, this will show you the trend here. So as you can see, a lot of money for defense spending first pops out. You have the Department of Education, energy spending. The good thing to do as well here is sometimes what I'll do is to get an idea of how it's trending and what it looks like comparatively to a similar time. What I'll do is I'll pull the same Treasury statement from a year ago. So instead of doing the January 24th, so now I'll pull January 4th, 2024 and look at some of the spending.
Make sure you hit the tab that says share this screen.
I'm gonna just share.
Welcome to the technocracy, people. Oh,
I'm gonna just share the window.
You ready for a robot in your house?
Hell no.
I'm dead.
Hell no.
You think the government gonna spend what, $500 billion and y'all not about to? Oh, y'all gonna feel this.
Okay, I'm sharing a window here. So what we're going to do is we're going to look at the 2024 and the
And
2025 for the same day as a comparison. And I don't look at this every day anymore, so bear with me. I have models for that. Okay. So let's look at this month's to date. This is last year. And yes, part of this is attributable to inflation, but not too much. So let's look here. And this is today, or this past Friday, I should say. So Department of Defense year to date, we're at about 27.5 billion, 23.7 billion at that point. Now let's look at the year to date. So right now, year to date, this is outpacing last year, but not by anything crazy there to suggest anything that's more
What you
more so a
mean? Ain't them
deviation from the mean.
billions? Them billions, right?
Yes, but
That's a
relatively
little
speaking,
crazy, bro. That's a little
relatively
crazy.
speaking, it's not a lot of money. Whether or not it's a lot of bodies, I'm not sure. But
those are in millions or that's a billion.
so this, for example, would be 3 million. So this is
Okay, damn.
yeah, it's about 23 billion there. That they were spending at that point last year.
So, like for all my government contracting people, can we see like how much money the government spend on like media content creation, just like some regular fields that we like deal in? That way, people can kind of have an idea, be like, "Damn, the government's paying this much for this. Maybe I should let the government pay me for this."
Right.
So a lot of where you get some of that stuff from. So for example, if you're a trucker, right, you can look here and we have DOT
You said if you're a
spending.
trumper,
A trucker.
trumper.
But you can look here and the Federal Highway Administration will kind of tell you, okay, these are typically trucking contracts that are out there for you to get on a federal level. Let's see what else. Transportation security.
You know what I'm saying? A lot of our money is going into tech and transportation. A lot of our newer funds.
So now, if you go to the Office of Management and Budget, that's where you typically get more information on those things. Or if you go to your local municipalities, Treasury statement, usually they'll have one as well. So let's see if we can find one for Broward County. Treasury statement. Okay, so that's not there for the county, but okay, Florida Treasury statement. The state usually has one.
Scroll down. Next one.
But yeah, if you also look at the Office of Management and Budget websites, it gives you more information in regards to that. Anyways, moving along.
The last thing you showed us was the state treasuries, like in any other state.
Pardon?
The last thing that you were showing us, that was like Treasury statements for different states?
Yeah, so states will have treasury statements as well. The website for each state where they display it is a bit different though.
All right.
So I was looking that up, but I'll go ahead and what I'll do is I'll put in the class notes where you could find some of the ones for your state as well.
Like literally utilize that to find where the state is allocating money out.
Yeah, I was trying.
So instead of you always looking to, do government contracting in a particular field, look and see what the city, the state, and the federal government what they need and fulfill those needs, and you will make money a lot faster. And
Yeah.
then you can build out.
For an example as well, like for if you're big into real estate, this is often a good indicator of where the market is looking at HUD and FHA distributions and kind of watching the trend of where that capital is going as well. So then here we also have the commitment of trader station statements. And what these are, you can get them from the CFTC, but they're statements from different market participants essentially because all of this stuff has to be reported in the futures markets. It's a very transparent market, but this tells you essentially who's holding what. So if we look here, what you would do is just look for whatever you're specifically looking for and you would type it in. So for example, let's say I wanted to do oil. That's soybean oil. I think it would be crude. We have Brent crude and WTI crude. WTI. Let's see here.
What can you mention the timeline again, brother? Can you mention the timeline you're talking about?
So here we have all different types of assets that are traded. So for example, we have the treasuries here. And if we look here, open interest is essentially the amount of open positions at any one point in time. Commercial are companies that are actually hedging their losses. So typically we ignore commercial. And what we're looking for is non-commercial and non-reportable positions. Non-reportable commissions. And non-reportable positions essentially would be what's going out.
So my thing, this is for trading, like trading in the stock market.
So this is, yes, essentially it would be for trading, but you wouldn't necessarily trade the market, the stock market with it. This is more for commodities, Forex, futures, things like that. But essentially the non-reportable positions are hedge funds, other shadow banking institutions that are not required to make reports on what they're holding because they're not taking delivery or anything of that nature. And non-commercial is retail positions. So this is the average person essentially, and larger. Then they're essentially non-institutional positions that are not commercial places like your McDonald's. For example, McDonald's would probably have heavy positions in wheat, not particularly because they're speculating in any direction, but because they're holding, because they have so much bread that they're taking in or whatever may have you.
Okay.
Did anybody have any questions?
So essentially, you'll use that for just to look where the money's going, as far as you said investing in commodities and all that.
Can you repeat that one more time?
I said that the last thing we was looking at, um, you said look at the non-reporting positions, right? And we're using that for just to get an idea. Can you repeat like what's the importance of using this sheet?
So
Like what can I do?
open interest are the positions that are actually open right now, or that were open at the time of this being reported. So as you can see, the reports come out fairly frequently, January 21st being the most recent one. But this shows you what's open here. So we see here there's more open short positions than long positions. So essentially this is net short. And then you also see the changes from the last reporting period or the last week there. And you can see the percent of open interest represented by each category. So when you see this starting to be skewed in any way, shape, or form, that's kind of telling you where smart money is going.
Okay.
Does that make sense? Or
Yeah, that makes sense. You got to get familiar with looking at that. Um,
and,
you dropped the
and
link for that.
yeah, drop this link here. And when you get to that one, what you want to go ahead and click on is the. She said, when the government is crying broke, that's not true. No, it's not true. It's definitely not true. All right. I mean, as you can see, we see all the money right here. And when you go, you want to look at Chicago Board of Trade, and you want to look at the futures and options combined when you do grab those reports there. And then, as a matter of fact, let's take an even closer look into it here. So here, this kind of gives you an indication on how the bond market is being traded. It kind of gives you a direction on where yields are going, if the yields are going to flip. Fed funds, and then here we have the Dow Jones. So what a lot of traders do that might be trading US 30, for example, what they might do is take a look here to see where the sentiment is before they set their swing trades.
Mm.
So we see a bit of a higher concentration long, but it's not particularly outside. So as we look here, we could say that it's a trend, but it's not a particularly strong trend. Like it's not a very volatile trend upwards right now, but it's a more sustainable trend upwards right now, not particularly high volume in that specific space. Just by looking at that there. Anybody have any questions?
Yeah, I'm just familiar how to look at it as far as like important information, but I'll study that on my own right now. 'Cause I have a million
Pardon?
questions. Shit.
And then here what we have is these withdrawals again, these kind of tell you where the money is going. So when you have things like this is the amount of money that's going out for Social Security, for example. Usually it spikes around the time that Social Security payments go out. Just as a trading thing, for example, for anybody that might trade the treasuries, usually on the day that Social Security checks go out, like 1 or 2 business days after that, you'll get a spike, like a small spike or a small pump in the treasuries because a lot of that money gets rolled over from Social Securities back into treasuries. Just as an example there. So it's a quick little trade to make you some money, and it's pretty reliable. And then here is money being essentially taken out of the economy or deposits being made to the federal government. So as you see here, so this is the taxes that are withheld from individuals. So when you look at your pay stub or your check, you'll see taxes withheld, individual FICA there. And this is that money going in. So Friday, about 8 billion in taxes. This past month, about 238 billion, about trillion fiscal year to date, and taxes taken out. And then this is the corporate level. Look how much smaller this is. Corporate tax versus
Right.
shows you where you want to be. I mean, look here. Year to date is less than month to date.
I have a question for you. Do you
And then here, this shows you the money that's going out in tax refunds. So about 3 million in tax refunds went out. This typically will go up around this area, around this time of year. And when this goes up, or when it has a large spike, you'll typically also see the S&P 500 get a little push, depending on how large that spike was. So within the next few months, about month and a half or so, when people start getting their tax returns, you should be seeing that spike quite a bit.
if they acquiesce?
Were there any questions right now, or anything anybody wanted to
Nah, that was
get more clarity on?
nah, that was dope information. I didn't even know. I didn't even know that data was out there like that.
Yeah, and it's all not only is it all free, but it's very accurate data as well. And this is a type of data that a lot of institutions use. And what you'll find is that a lot of the movements in the market, once you learn how to read the Treasury statement, you'll find that a lot of the movements in the market are correlated to it. So you don't really have to watch the charts like that or do a lot of guesswork when you look at things on on the larger scale of things.
Yeah.
That's what allows you to step back and trade weekly to monthly time frames and really make more sustainable gains.
Yeah, that's dope. I'm definitely gonna take some time to look at that.
Yes. And did anybody else have any questions in regards to the Treasury statement or the commitment of traders and using it within your day-to-day trading?
Um, damn, you can't say that because we don't lie. But outside of the daily to day statement, what are some things in the last 2 weeks? Because I'm not, it hasn't been that long since you spoke to them. But what are some things in the last 2 weeks that you feel as if people should be aware of when it comes to economics, especially because Davos just happened?
So In the next few months, some of the things that people should be aware of is the trend to tokenization, especially tokenizing real world assets. And essentially, what that means is taking traditional assets and representing them in some form of digital format outside of the ones that we're most accustomed to seeing them on, which is your traditional exchanges, your NASDAQ, um, New York Stock Exchange, ICE, et cetera, et cetera. ICE not being ICE, but the actual exchange. Um, and it's taking them off of those exchange, and it's representing them in tokens essentially, and moving them onto digital exchanges, which will allow trades to be settled faster at lower cost, and should move a lot of the volume to distributed ledgers over an extended period of time. I would say really over the next 3 to 5 years, we should see a large migration of trading volume to those exchanges. So, in other words, what that looks like for you is you want to be an early adopter and you want to be very familiar with the exchanges that they're moving to, or the modicum of exchange that they're moving to, uh, and the platforms that support this type of infrastructure. So a lot of what we're looking at for that, for example, if you look at so if we pull up this publication here, it talks about BlackRock's $10 trillion tokenization vision, which is the future of real world assets. And what they're essentially looking to do is, I'm not sure if y'all saw that, but my screen just blacked out. But what they're essentially looking to do is move a lot of that liquidity and that notional trading value over to the blockchain by tokenizing these assets. And a lot of the standard for doing that will be with Ripple and Hedera. I'm looking for the specific tokenization thing. I want to say it's Sologenic. Yeah, Sologenic. So this is an advanced tokenization solution here, and they're essentially made to help bring tokenized assets and bridge them over to the Ripple blockchain. And they're specifically working on CBDCs a lot, which are central bank digital currencies, just to give you an idea of what's coming in the future. And a lot of this, as we talk about the underbanked global south and the moves to stabilize the world's economy and take it from a unipolar, meaning one major superpower economy, to a multipolar economy, and the de-dollarization trend that's going, especially with Saudi Arabia kind of breaking the covenant of Bretton Woods. So our current system is propped up on the petrodollar, essentially, which essentially, long story short, 1973 made a new agreement, G7 conference, where essentially the dollar is now backed by petrol. And the way that is backed by petrol is that we made an agreement with the Saudi Arabians, essentially in exchange for protection of them within the Middle East, and et cetera, future trades in their oil, future oil trades and future sales in their oil would be denominated in US dollars. In order to do that, a lot of times what would happen is these countries would hold treasuries. And because they're holding treasuries, they're essentially giving loans to the United States. So when you have a treasury, for example, with a 0 to 1 to 2 to 3% coupon, This is essentially you loaning money to the United States at a very, very low percent interest rate. So we got a lot of free or low cost money for a lot of time. And Saudi Arabia, long story short, has broken that agreement. And with the breaking of the Bretton Woods Agreement and more trades, especially in oil and other things being denominated outside of the US dollar, we're going to be seeing a lot of changes in the global economy. And a lot of the budget cutbacks that are being made are in anticipation of this as well, which I would imagine is where a lot of the sentiment about devaluing the dollar is coming from, is to make it more appealing within the trade, within the trading of these raw materials specifically. Yes, so there are models available that can detect the trends of these things in these docs. They're models that I developed myself, and I use in the course of my day-to-day operations. For specific information on that, I do consultations. You can reach out to me in the school community, and we can set up a call for more information on that. But yes, I do models on those specific things, to answer your question there. And there you go. But yeah, as we're moving into the future, I would say it's important to familiarize yourself with Ripple, with Hedera, with some of these other technologies. Get comfortable using them, and not financial advice, but also to kind of hedge your bets in them as well, as the standard for liquidity for just day-to-day transactions is changing, and a lot of BRICS partnerships, BRICS being Brazil, Russia, I believe India, China, and Africa, South Africa. But they also have way more member countries and partner countries that are on the path to becoming member countries. But we have a lot of the world that is underbanked. So as they become included into the global economy on the same level and get the same type of access to resources that we have, you should also expect to see a lot of liquidity go into these platforms, and thus a lot of price appreciation. Did anybody have any questions?
At the moment. Mm.
Okay, did anybody have
What
any
was the
thoughts
two
about?
things that you said that we need to get familiar with? You said Ripple and what was the other one called?
My bad, I wasn't on stage. Can you hear me, bro?
Yes, I can hear you.
What about how do I assert myself from your standpoint, how do I assert myself into this technocracy that we are clearly in? We just spent $500 million on AI development. We just seen China disrupt the stock market with their new AI release. The World Economic Forum, they have released how many jobs will be lost, how many new jobs will be created, how many jobs will be kept. So,
Hmm.
like, how do I ensure that I'm a part of this transition, especially with all of the stuff happening with like DEI? And some people believe that DEI had a lot more to do with Black people, and now they have a fear of losing their jobs. And I just tell them they need to look a little bit more into it. So we see, even like with the things going on in immigration, if there's mass deportation, that is going to force some companies in order to hire other people and then pay them at a higher rate. And most corporations would just end up firing these peoples and automating their systems and bringing AI in. So how do I combat a situation like this that's literally happening in 2025? And it's in the World Economic Forum rollout for these things to be happening from 2025 out to 2030. So what should we do?
So two things for you to do, or two things that you can kind of anticipate as the fallout from this. The first being with the DEI situation and really the shrinking of the government in general. Essentially, the goal in this, or the stated goal in this, is to shrink the government and offload a lot of philanthropy and other things that may be deemed as the welfare state to some, to offload that from the government and it back to push it back to the private sector, essentially. So what you'll be seeing is a lot more contracts available for actual performance and delivery, not only on a consulting side but also on just a strict delivery side to the private sector. So I do see a uptick in private government contracting. So you want to be prepared for that specifically. And another thing that I see as a way to kind of hedge yourself against this is essentially not to be last. If there are parts of your business that can be automated or parts of your business that can be scaled, it's definitely imperative to do that quickly because you're going to be missing out on opportunities. And just to be quite frank, what you can do in 24 hours, even if I can't match the specific level of performance that you do as far as quality goes, I could flood it with so much quantity at such low effort and such low cost, it won't matter anyways. So if, for example, if you're Leonardo da Vinci, every painting or every sculpture, and I'm Botticelli, every sculpture, but I'm automating it, and you're doing this by hand, it doesn't matter that I might not be at the same level of quality as you. I could push out so much, I can just flood you out, and I'm going to be the better option over time, and I'm going to put you out of business. So it's definitely important to automate as quickly as you can. That way you can focus on making the higher level decisions, because now that a lot of the menial things can be automated and pushed out of the way, now the difference in actual direction and actual strategy is compounded. So what we'll see now is we'll see even larger income inequality. We'll see fewer people with masses of wealth. And we'll see an even sharper shift to people being compensated for the quality of their judgment and the quality of their strategy than before. So really it's just being fast to automate, fast not to, if you're already behind, it's fast to catch up, and then fast to stay onto what's next. You want to fail fast and fail often and put out as much projects as possible. Did that answer your question?
Yeah, that was dope, bro.
Did anybody have any questions in regards to that?
No, I don't, but I appreciate that that motivation. The world is changing. AI is here. You know, all those automotive opportunities are here. So you definitely got to take advantage. Or I think DJ post something like um, AI won't take your job, but the person that's using AI will take your job. So yeah, this class was definitely important.
Yeah, definitely. Definitely. Were there any other questions? Okay, well, I'll be getting the notes out to y'all in the community as far as this class here. And in the next class, I'll be going over the correlation of assets, basically how assets move together. So you could kind of see for yourself, like okay, Bitcoin and, for example, the S&P 500 move very similarly. So I can kind of play the arbitrage on that. I'll basically be going over some of the basics of statistical arbitrage and how a lot of hedge funds and quant funds make their money more predictably over time while minimizing their risk.
All right, bet. Can't wait for that, class. Can't wait for that.
All right. And did anybody else have any questions or any comments or anything?
No, we appreciate you, G. Thank you for the information tonight.
Thank you, and thank y'all for coming out here.
No, for sure, bro. Like as usual, it's always been great and it's always been informative. I most definitely appreciate you pulling up, and I look forward to the next one, bro. And if y'all need anything, look out for all of the information that is in the community for the tech rollouts, for the prototypes, for the AI automations and stuff. This process has happened very fast. And if you can get into these fields or either just learn how to get into a subcontracting field when government contracting, you can make a lot of money, because if you see how much money is going into, like, when you look at the Treasury report, you see how much money going into these fields, bro. It's nothing but an opportunity. We're going through a wealth transfer. Make sure you're a part of it. That's all I'm saying, fam. But
All right.
until next time,